Something a little bit different today. Let's think through from first principles where the stock market and certain sectors of the stock market might be headed in the future due to the Iran conflict, the destruction of oil infrastructure, the rising oil costs, and all of the consequences that that will bring. So the first thing to note is that I think the market in general will probably be selling off, mostly because the largest names in the index, whether it's the S&P or the QQQ, have a lot of tech stocks in them, and I think tech is going to be very negatively affected due to the Iran war. If we think about the consequences of what's going on over there, we've got increased cost of oil and gas and helium and lots of things that both data centers need for the hyperscaler companies that are either investing in data centers or just the tech companies that are having that as their business model, things like Nebius, CoreWeave, the sort of cloud compute companies. Those are all probably likely to perform pretty poorly in the months going forward. Now, I'm not sure how long this stretch of underperformance will last. I think you've at least got until you get to the bottom on the S&P of this parallel channel, as we've talked about previously, which would be another 15%. But at that point, you are essentially in a bear market. According to the technical definition, that would be 20% down from all-time highs. So from that point, it's possible that we would continue to see further downside, and that is one of the outcomes that I'm thinking is quite possible if you have higher inflation, eventually demand destruction due to the higher prices of oil that we're seeing. Then that could mean bad times for the economy and the market in general rolling over. So that's the first thing to note. I think tech will be an underperformer, and the next thing to talk about is all the other stocks that are exposed in some way quite nastily to the rising oil prices. So this would be airlines. We can see here, for example, United Airlines has also had a sell signal, and you're about to flip into a bearish regime. So basically, airlines are using the kerosene, the jet fuel, which of course is heavily dependent on the oil price as to how much that's going to cost airlines to be using. And there might even be shortages, there might be problems with these airlines running their businesses going forward if there are serious shortages in oil, or at least price increases in that regard. So I imagine transportation will not do very well. You're thinking things like airlines, in particular, maybe cruises, cruise lines such as RCL, Royal Caribbean, also looking quite dangerous here because you're about to flip into a bearish regime potentially and maybe breaking the support levels around here. That's quite possible. So these are going to be the big losers, I think. Technology stocks, because of the data center and the need of AI to have a lot of energy and the input costs for that going up. There's also the risk, of course, of Iran destroying infrastructure that the tech companies are using in the Middle East. They have threatened to do that. So I think for this reason, those kind of stocks and the transportation stocks, so anything to do with sort of holidays, vacations, travel, airlines, cruises, all of this are going to be quite negatively affected. So what are the stocks that are actually going to perform well or hold up okay in this environment? Well, obviously, you've got oil stocks, right? Now, these are the names that at the moment seem very strong. This is ExxonMobil, of course, just in a massive bullish trend. And yes, you get these big pullbacks as we had yesterday, but as of right now, oil seems to be coming back up. There's just a lot of talk and bluster from Trump and a lot of lying, to be honest, about whether there's going to be escalation in the Middle East or, how things might be looking. So I think oil, if the conflict continues, and even if it doesn't, probably still going to outperform for some time. Maybe you eventually get a bit of a top on these particular stocks, once this kind of a trend has been established for several months, you might eventually roll over on oil. That's particularly if the economy as a whole begins to struggle and you enter a recession. The market in general will just sell off entirely, including the oil stocks. The other batch of stocks that I think are really primed to do well is the chemical stocks. This is things like Celanese, LYB is another one. You can see here they're basically putting in buy signals and bullish regimes. So I think this is like the oil trade a little bit, but a little bit delayed in the price action that you're getting. You probably also have an outperformance here. It's just the trend has not quite fully developed in the same way that the oil trade has been ongoing, essentially since the sort of Venezuela raid. That's when oil really began to take off, whereas chemicals a little bit more delayed. Of course, the bull case for chemicals is that the US companies, which are involved in producing these kind of chemical products, are going to be able to potentially gain market share over their competitors in Asia and Europe, because in those economies, the price of natural gas and oil, the input costs for chemicals are a lot higher for European producers. So essentially the US market might benefit, and I think that's why in some part you're having this outperformance coming for chemical stocks. So a similar thing can perhaps be said for fertilizer as well. Now, to me, this is not as clear-cut of a thing. For example, this is a fertilizer company, Mosaics. Mosaic company. Arguably, there could be outperformance here if this trend can reverse and you can head higher. And that's just going to be due to potentially shortages of fertilizer, perhaps prices having to increase due to the closure of the Strait of Hormuz and things like this. So that's another potential sector that could be doing well. We're also thinking ocean liners. Sorry, not ocean liners. We're talking about shipping and VLCCs, very large crew carriers, these sort of big ships that carry your oil and things like this. A lot of them are stranded in the Persian Gulf, and the throughput there is very low. So arguably, that's why you're seeing an outperformance on things like Scorpio tankers here, STNG, and I'm sure there are other marine shipping names, Zim as well, the Israeli company, perhaps a little bit of outperformance here, a bit of a bullish trend going on. Perhaps that's coming back in there, I'm not sure. But these are potentially the kind of sectors that are most likely to outperform in my mind. You've also got perhaps anything that's not reliant on oil. For example, we've got NIO here entering a bullish trend. This is an electric vehicle company. So perhaps some of these smaller electric vehicle companies could also be very good picks going forward, as people are probably going to be incentivized in some way to switch to electric cars if the price of oil and gasoline is going up in a big way. When I look at other EV names such as Lucid, it's not as clear of a picture. And Rivian as well. These kind of names might not be as good of a pick as NIO. So perhaps that's just some exceptionalism from NIO. Perhaps them getting their business turned around is more the exception than the rule. But another interesting stock that has put in a buy signal is also American Waterworks Company. Quite a boring name, utilities. So what does that mean? Well, if the market in general is selling off, then quite often these kind of very safe utility plays tend to do pretty okay, or at least they hold up, they hold their value. You get paid a dividend to hold them. So a lot of people flock to these sort of stocks when there's downturns in the market. So that could be why you potentially get an outperformance in these kind of stocks as well. Perhaps the safe haven names will be doing okay. You've got stocks like Pepsi, which I've talked about before, in a bullish trend. Comcast, another stock that could potentially outperform, although I'm not 100% sure on this. I thought it might be doing a bit better than it is, but you had a buy signal here. There's potential maybe on these sort of big names. If there is higher inflation coming as well, essentially any stock that has a lot of debt, or these sort of big industrial stocks, and yeah, any high debt names should actually benefit in some way from inflation, because it's going to diminish the value of their debt and hopefully allow them a bit of a lifeline in that regard. And the last potential outperformer I want to highlight is real estate stocks, real estate investment trusts, REITs. Also could be an interesting play if we're saying there's going to be higher inflation because of oil, maybe even rate cuts if the market also is tanking pretty heavily. I'm not 100% sure on that, but I think rate cuts are a possibility in theory. Those could be quite the fuel for real estate adjacent stocks, because lower rates potentially means it's much easier to get a mortgage at a cheap rate. And again, you know, some of these are going to have variable mortgages. So if the rates come down, it's also going to lower their costs and improve their profitability. So that's another interesting sector that's kind of putting in a buy signal potentially here. Could be that REITs are a good option as well. So I hope this video was informative in some way. Often we just talk doom and gloom on, you know, the stocks going down, the tech stocks looking really bad, you know, this stock's going to go down a lot. But I think it's more practical if we also have an idea of some of the stocks and sectors that we might want to buy that might benefit from this kind of situation. So hopefully, you know, have a better idea of some of the sectors that might outperform going forward, and yeah, maybe stay away from tech, at least until we get down to the bottom of the parallel channel on the S&P. Then I would maybe be looking to buy any of the stocks that look decent technically, and maybe even fundamentally. But with that being said, thank you very much for watching, guys. Subscribe as always for more videos, and I'll see you tomorrow. Bye-bye.